Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark wraps up the major equity market action. Author of the book Street Smarts, Adventures on the Roads and in the Markets, Jim Rogers warns Japan's poor economy could lead to social unrest. Mackie Research's Payton Nyquvest runs down the junior Canadian markets. And to wrap up the show, we'll have Company Showcase featuring Larry Reaugh, CEO and President of American Manganese. We'll talk to Ross Clark right after this.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
We kick off the show with Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
It's a pleasure to be with you, Jim.
The Fed earlier in the week again spoke. I guess it was full of sound and fury, signifying nothing once again.
Lots of build up to a non-event once again. Here we are, interest rates. We started the year already talking about multiple increases as we move through the year. We'll be lucky at this point to have one in December. I guess the numbers for the economic numbers are just not firm enough for the Fed to be looking to do anything. And, really they basically follow what we see happening in the cash markets as far as T-bills and the bond market's concerned. And for all that we had seen a small move up in those rates, it wasn't enough that really reflected the strength in the economy that then would feed for the Fed to be looking to do anything. But the result was pretty much as we have seen in the past in terms of the market action. You had immediate pressure on the U.S. dollar, gave up ground against virtually everything, whether it be strong bond markets, strong stocks, strong currencies, and metals on Wednesday and Thursday, and then we saw reversals back down on Friday. And, we look back at these FOMC meetings that are, they're 1 or 2 day events. And if we go back over the last 20 or 30 years, you find that the market action in the days of the FOMC meetings and the following day really, they have been some of the best days historically for the market. If you take out the 300 days of the last 150 meetings, if you take out the 300 days that occurred around those, the stock market is actually unchanged since 2000 on the S&P. With those days, it's up better than 100%. So just goes to show how much the short-term gyrations in the markets and the action around those Fed meetings has as far as the markets are concerned. So at the end of the week, everything ends up settling back closer to where we were on Tuesday.
Does the Fed know when they talk it really does affect the markets?
Well, I don't know that, I'm sure that they know it. But in reality, what's happening here is I think that the media is building these events up to be much larger than they are. They're looking for headlines, and they're it's creating more market volatility than really I think is warranted. There's no question about that.
Well, the media now pays attention to the markets because of the big crash of 2008.
Well, and, invariably they do. After any crash, you will see that type of effect because everybody is worried about the next one. We saw that after the break in 1974. You saw it after the dot-com meltdown. Everybody, or 9/11, everybody's worried about the next major event. But, it's been most of these, other than say 9/11, didn't come out of the blue. These were slow evolving tops in the equity markets that then ended up gaining momentum over a period of many, many months. And what you've got up here right now might be a rolling top, but, my work and the work that we are looking at would suggest that a 7% decline in the market from the high would be normal. And if we get something along that line, we're going to take that as still having a positive bias. And here we are coming into the last week of September. Typically, in an election year in particular, you're going to see some pressure in the early part of September, a pause mid-month, which is what we've had, and then from here, so from pretty much the middle of October to the third week of October, you're going to be looking for good basing action in the market. So we're probably going to drop a little bit as we move into that low, but that's clearly where you want to be looking to establish some positions.
What kind of action are we looking at in gold and silver?
Still basically coiling within very tight ranges still. They got a good bounce on the Wednesday, Thursday action. What I don't like here, as far as what we're seeing, is that even though prices are coiling and they came up to some good resistance lines and they're failing, the miners are not doing as well as they had been. So clearly, if you do the ratios of miners divided by bullion, whether it's against silver or against gold, they're starting to underperform. And this isn't healthy. We want to see miners start to outperform in the early stages of a move. So this then fits into the bigger scenario that we had that 29-week rally off the bottom. We'd be looking for the normal correction to be 5 to 11 weeks, 7 being the norm. That's the most, and that would be this coming week. However, we really haven't broken enough on a relative basis when we look back historically. And so we'd expect that for all that next week would be an optimum time window, it could stretch easily another 4 weeks beyond that.
Ross, thanks a lot for talking with us.
Always like to be with you, Jim.
Coming up next, Jim Rogers on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Jim Rogers. He's a world-renowned investor and author. His website is jimrogers.com, and he's speaking to us from Singapore. Jim, welcome to This Week in Money.
Well, I'm delighted to be here, Jim.
Jim, you've just published a brand new book, Street Smarts, Adventures on the Road and in the Markets. Can you tell us a bit about the book, please?
Oh, well, my publisher said, you've written a few books, but nowhere do you pull together how you got from the backwoods of Alabama to, sitting there in Singapore. That must be quite a story. I said, I doubt if it's quite a story, and I doubt if anybody would read it, but he insisted, so I put together, basically, I guess it's a memoir as much as anything else, of how it all happened and what happened.
What is, the big surprising thing that people will find very interesting or shocking in the book?
Well, I don't know if there's anything well, there may be shocking things. I do sort of talk about some of the people I've been associated with and how I wasn't particularly happy with them in the past, and how it all happened. I've driven around the world a couple of times. I had a successful career on Wall Street. I did a few things in university, so it's been an interesting life, if nothing else. I didn't write it for shock value, although now that I think about it, some people have told me some of the things I say about people are a bit surprising when I give my assessment of some people.
Getting into what's happened in the news lately, the Bank of Japan and the Fed had meetings earlier in the week. What happened, and does it change anything?
No, sir, it doesn't change anything for me. I mean, I know you have to pay attention to central banks, but I don't pay too much attention to them because, for the most part, they follow the markets. The Federal Reserve likes to tell us all that they're the masters of the universe and control everything, but essentially, historically, they follow the markets as much as anything else. The Bank of Japan, all you have to know about the Bank of Japan is that they're out of control and don't have a clue course, that's all you have to know about Washington as well. They're out of clue or don't. I mean, they're out of control and don't have a clue, but especially Japan.
What do you think of Japan's policy of negative interest rates?
Total insanity, madness. It hasn't worked. Hasn't worked anywhere in the world. Not going to work in Japan. I mean, Japan is a wonderful, wonderful country. I love going there, but for goodness sakes, you know, they're ruining the country. Mr. Abe is going to destroy it. The population is declining. It has been for a few years. They're not having any demographics. They don't have immigration. The debt is going through the roof. I mean, Japan is not going to be any Japanese in 50 years. The country's being ruined. It's a nightmare to see what is happening. If I were a 10-year-old Japanese, I would move away. Or I would learn how to use an AK-47.
Do you feel that violent revolution might happen in Japan?
Well, it's happened rarely in Japan. It's happened rarely anywhere in the world. But I'm just suggesting, you know, in the next many years, several years, in fact, the debt's going through the roof. The population is going down. The economy is going to get worse and worse and worse. That kind of scenario has always led to civil unrest and worse.
It's hard to believe that would happen in Japan. We always think of it as being such a law and order nation.
Well, that's because most of us only know the history of Japan of the past 100, 150 years or so. There have been plenty of internal squabbles in the past. I assure you, there are forts all over Japan, and those forts weren't built against foreign invaders. They were built for the guys inside the country.
How is China's economy?
Well, like everybody else, the Chinese economy is slowing down. Their customers, their clients, Japan is in recession already. The government says it is. You know what's happening in Europe. You know what's happening in America. So when you trade with the outside world, and if your customers are slowing down, you're slowing down too, Jim. So the Chinese economy is certainly slowing. Worse still, the Chinese now have debt. In 2008, when the world came to an end, the Chinese had a lot of money saved for a rainy day, and they started spending it when it started raining. Well, now even the Chinese have a lot of debt, so they're not going to be able to save us like they did the last time.
Does China have a real estate bubble?
Well, some places, bubble, yes. But prices are extremely expensive. They've been going up and up and up. I guess you would have to describe it as a bubble, certainly. In some cities, the government, Beijing, has been trying to slow things down for a while now. They haven't been very successful. But I certainly would not buy residential property in most of Japan, most of China.
Do they have a debt bubble to worry about?
A debt bubble?
Yes.
Well, I don't know if it's a bubble yet. Some people are going to go bankrupt. Beijing has said we're going to let people go bankrupt, which is wonderful, of course. It's good for the Chinese. It's good for the world economy. It's not good for the people to go bankrupt, obviously. But China has said, and rightly so if you ask me, we're going to let people go bankrupt.
Will that be damaging to their economy or just a thing that will help level it out?
Well, it'll help. Bankruptcy is always good for overall. You know, the way the system is supposed to work, when people get into trouble or make mistakes, they're supposed to, close down, reorganize, and start over. Competent people come in and take the assets and start over. That's good for the world and good for the system. Will it happen in China? The Chinese government has said, yes, we're going to let people go bankrupt. I wish in America they would let people go bankrupt. So far in America, as you know, we say nobody should fail. But the Chinese have said, and I hope they're going to do it, that they'll let people go bankrupt.
When they say people, do they mean corporations or national organizations?
They say anybody who fails, the market should determine. So this is what they say. The reason I keep emphasizing this is what they say. They've said it. They've said that the market is a better judge than bureaucrats and politicians. Now, I wish they would say that in Washington or London or a few other places, but that's what the Chinese say. The reason I keep emphasizing say is because they've never been faced with the real crisis of bankruptcy like some of the Western countries have. They may panic. You know, America panics whenever somebody gets in trouble. I hope that the Chinese mean what they say. They certainly mean it now. Let's see if they mean it when they're faced with hard facts.
Have currency restrictions tightened in the past year for China and Hong Kong?
Certainly in China, it's harder now. There were little lax about people moving money in and out of the country. Now they've certainly tightened up on it, which is a mistake as far as it's always a mistake when people restrict the flow of capital or goods or people. In my view, they certainly seem to make it harder now for people to take money out of the country.
Of course, China has been blamed for the real estate bubbles in places like Vancouver, where there's been a lot of foreign currency spent on local real estate. Have the Chinese really caused that bubble?
Well, you're in a better position than I am. A lot of Asians in Vancouver now, as you know, not just Chinese, but especially Chinese. I guess that the numbers would indicate that most of it is because of the Chinese moving into Vancouver. There are, you know, we had this commodities bubble or price increase in Canada too, which made a lot of Canadians much better off and even wealthy for a while. So I would suspect if there were a single cause, and there never is, but if there were a single cause, we could blame it on the Chinese. But I for one, always am delighted to see capital come from anywhere to anywhere, and most people are. It does sometimes cause bubbles, but if people are aware and have any sense of history, they'll stay away from the bubble and let other people buy at the top.
Do you think the Chinese have been unfairly blamed for real estate bubbles around the world?
That's a strange word. If people want to buy something and if they want to pay a high price, the sellers are usually very happy to get that. I don't think the sellers blame anybody. Nobody calls. They don't have to sell if they don't want to. But there certainly has been an influx of Chinese and Chinese money to many places in the world. But I don't think any seller would say those evil foreigners, those evil Chinese have come in here and paid a high price for my property.
Are you bullish or bearish on China, short and long term?
Again, it depends on what does that question mean. Some parts of the Chinese economy, as I've said, are overpriced, and if you deal with Japan or Europe, you're probably going to suffer, especially if you have leverage, if you have a lot of debt, which some Chinese companies do now. On the other hand, some parts of the Chinese economy are going to boom, even if America falls into the sea. China's filthy, but they're spending huge amounts of money to clean it up. China needs an enormous amount of better quality and more health care. They're spending fortunes to get that. There's a One Belt, One Road policy. They're building railroads, probably it may be the largest infrastructure project in the history of the world. Somebody's going to make a lot of money off the One Belt, One Road policy. On the other hand, if you sell a lot to Walmart and you have debt, you're probably going to suffer in the next few years.
There's debt bubbles around the world, personal, corporate, and government debt. By printing money, can central banks keep those debt bubbles from bursting?
No, they cause the debt bubbles, you know. I mean, much of this bubble, or certainly debt bubble, is caused by the massive amounts of easy money, free money. Not just easy money, free money. So the central banks are really causing this problem. There's too much money, too much free money, and we're all going to pay a horrible price for this, Jim. Never in the history of the world have you had all the major central banks in the world printing a lot of money at the same time. Interest rates are the lowest in recorded history in much of the world now. No, this is artificial, It's going to end very badly. We're all going to pay a horrible price. I hope you're worried. I hope you're very worried, because it's going to be terrible when it comes to an end.
What kind of effects can you see?
Oh, bankruptcies, turmoil, social unrest. It's going to be the worst financial situation in your lifetime. No matter how old you are, it's going to be the worst in your lifetime, and we're all going to pay a terrible price. Literally, you're going to see people go bankrupt. You remember Lehman Brothers and Bear Stearns. Well, Lehman Brothers was over 150 years old. Bear Stearns was over 80 years old, 90 years old. Yet these places disappeared. You're going to see worse, not just financial institutions. You're going to see hospitals, museums, universities, a lot of things disappear, which are going to shock us all.
Will they dip into your bank account to help save some of these corporations and banks from going under?
I don't know if they'll do it to save corporations. They're certainly going to do it to save banks. It is now the law in America and most Western countries, most developed countries, that they can take your money from your bank account to save your bank. That law did not exist 10 years ago in most of the world. Now it exists in much of the world, because if governments realize, oh my God, if we have to bail them all out, we're going to go broke too. And it's easier politically, instead of going to the voters and say, you're going to bail out such and such a bank, it's easier to say the depositors are going to bail out the bank. It's not good for anybody, but that's what they're going to do.
Don't most voters have a bank account?
Yeah, but if there's a bank with 50,000 depositors and it goes bankrupt, that's one thing, but that's not the whole country. If the whole country has to bail out Bank X, everybody's going to say, oh my God, they're taking my money in taxes to bail out Bank X. That's everybody, every voter in the world. But if it's only 50,000 voters, it's not quite so disastrous for the politicians.
If the central banks continue to print money, what effect would this have on stock and commodity markets?
Well, that's an extremely good question. You see what's happening. So stock markets certainly and bond markets certainly are at highs that are not expected or reasonable. Earnings have been going down, for instance, in the United States for 6 quarters now, and yet stocks are going higher. But Jim, it's not really stocks that are going higher. It's a few, 10 or 20 big companies that go up every day. If you look at the breadth of the American stock market, it's actually in decline. Most stocks are going down and have been for 2 years now. Most stock markets in the world are down now. So it's really just a lot of money that's going into a few big stocks. Apple goes up every day. You know the names as well as I do. And that is deluding us all into thinking that everything is okay. It's not. You should be worried.
What should people do to protect themselves?
Well, I grapple with it every day, needless to say. First of all, people should only invest in what they themselves know a lot about. You should not listen to some guy on the radio or the internet or the TV or in the newspaper and go and do something. You should only invest in what they themselves know a lot about, or you're going to suffer even more. I can tell you what I'm doing. I own a lot of U.S. dollars because as the turmoil gets worse, many people are going to flee for a safe haven. They think the U.S. dollar is a safe haven. It's not, but people think it is, and it's certainly less bad than some things. So I own a lot of U.S. dollars, the expectation being that the dollar will get overpriced, and then I'll have to sell my dollars. Who knows what I'll do at that point. I own some agriculture. I'm very optimistic about agriculture going forward for many reasons. I own some Chinese shares. I have some shorts in America, Russian shares, Russian bonds, Russian short-term government bonds in rubles. These are some of the things that I'm doing.
In other words, you're diversifying.
Well, I wouldn't, not very diversified. diversification is not a way to make money. I do, what did I name, 4 or 5 assets?
Yeah.
My assets are usually pretty focused.
Is the bond market in a bubble?
Yes, but you would have said that last year or year before. There's a bubble in the U.S. and the bond, no, not just the U.S., worldwide bond market for the most part. The problem with bubbles, the facts about bubbles is they always go longer than anybody expects. Rational people realize that a bubble is occurring, and they get out. But unfortunately, rational people get out too soon. Yeah, that's why it really is a bubble, because it goes higher and higher and higher. Eventually, there's nobody left, rational people or irrational people. But yes, we're in a bond market bubble. I said earlier, bonds are at the highest price in recorded history. Interest rates are the lowest in recorded history. It's never, ever happened before like this, and it's happening all over the world. It's based on staggering amounts of printed money. You know, in Japan, the central bank has bought just about the entire bond market. Now they're buying the stock market too. This is not reality. This is going to end very, very badly.
We'll have more with Jim Rogers next on This Week in Money.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Jim Rogers, the author of the book Street Smarts, Adventures on the Roads and in the Markets. We're talking about Japan's poor economy. The biggest bank in Japan does not sell government bonds. What does that say about the government bonds?
Well, no, I'm not the only person who realizes there's a problem developing in Japan. You understand it, I understand it, many Japanese understand it. But Mr. Abe, who is directing the central bank as to what to do, and his central banker, think that they're saving Japan by driving interest rates to nothing and by buying up stocks. They think they're saving Japan. I think they're ruining Japan. We will soon see.
Can these low interest rates continue indefinitely?
No, of course not. You can only go so negative. They're already negative in many parts of the world. That is not reality. I want to repeat, it's never happened in recorded history. There's a few academics who have gone over the deep end, have told everybody this is a good thing. It's not working. It's not going to work. And eventually, the market is just going to say, we're not going to play this game anymore. And that's when you have disastrous problems. It would be better if somehow these academics and bureaucrats came to their senses. They'd still have problems, but at least they would be more manageable and slower problems. When the market says, hey guys, we fed up, we're not going to play anymore, that's when it's totally out of control, and that's when you have panic and chaos.
What do you see ahead for the U.S. dollar?
Well, I own it. As I said before, I expect a big turmoil, and when everybody's panicking, they're going to look for what they think is a safe haven. They're not going to buy the euro, I don't think. They're not going to buy the Canadian dollar. They're going to rush around and buy U.S. dollars. It's going to get overpriced and may turn into a bubble. I mean, if you have total chaos in financial markets around the world, and people are rushing into the U.S. dollar as a safe haven, and you're going to have, you could turn into a bubble. If that happens, I'm sure I'll sell it too soon, but hopefully I'll get it right.
Are you more bullish on gold or silver, and why?
Well, if I had to buy one of those two, I would buy silver, just because silver is down more on a historic basis than gold is. I own both. I am not buying either at the moment. I expect another chance to buy both later in the next couple of years. at which point I hope I'm smart enough to buy a lot more of both.
At a good price, you hope.
Well, yeah, that's why I'm not buying now, because I don't think this is a good price. There will be a better opportunity to buy gold and silver.
In the Brexit aftermath, is the European Union likely to survive?
Not as we know it, and maybe not at all. It's certainly there are going to be people who are going to pull out, others who will try to pull out. Some might even join. I don't know who, for instance, but it could happen that others might join. But no, it will not survive as we know it. Too many people who saw what happened in the UK, many politicians will try to make their reputations by pulling out of the euro. Some will. It will not survive. It's badly, it's a great concept, and the world needs something to compete with the U.S. dollar. Unfortunately, the execution of the euro has been hopeless. They all promised not to have debts. They all promised all sorts of things. Well, like most politicians, they went and lied and cheated on their promises, and so the execution has not been very good.
Is one of the problems, instead of being an economic union, there's a lot of political interference in the affairs of individual countries?
Well, the best thing that could happen would be to abolish Brussels, keep the free trade union, keep the open economic union, and just get rid of Brussels. Brussels is a problem. You've got all these absurd bureaucrats sitting around dictating all kinds of rules that have to apply to the Finns and the Greeks and everybody else. It just goes from one set of madness to another. Abolish Brussels and you wouldn't have any problems.
Protectionism seems to be making a comeback. What effect would protectionism have on markets and economies?
Well, protectionism has always risen its ugly head when things start going wrong. There's something wrong somewhere in the world, as many people know. Protectionism has always led to bankruptcy. It's usually often led to war as well. But it does seem to be rising again. I mean, Mr. Trump in America, if he does what he says, now I'm just quoting his words, not mine, if he has gigantic trade wars with Mexico and China and who knows what else, history shows that's always bankruptcy. And that kind of bankruptcy often has led to war in the past.
Are wars usually used to cover up bad economies?
Always. Politicians, when you start having problems, you blame it on the foreigners. Again, this is throughout history all over the world. The foreigners have different languages, different food, different skin, different clothes, different religions. It's very, very easy to blame the foreigners. People always have done it, and they always will. They say, not only they smell bad, and their food smells bad. I mean, it's astonishing some of the things that I have heard and have read about throughout history. It's always worked that way. You can sit there and say, this is crazy, it doesn't matter. First of all, the main lesson of history is that very few people learn the lessons of history. And the second is that even if they know the lessons of history, they don't care. They're more worried about the short term.
Haven't studies proven that immigrants usually are the hardest working people and contribute the most to the economy in the long run?
Absolutely. If you look at America, the United States anyway, and Canada became great because of immigration. We had all this fresh blood, new ideas, new capital. It worked their heads off. They've always been good for countries. You look back over history, Rome was great because it was full of immigrants. Part of Spain 1,000 years ago had massive numbers of immigrants. You look at some of the Middle Asian countries, Samarkand was a great, great nation. It was full of immigrants. It's always worked that way. You start closing the doors and throwing out immigrants, and every country that's done it has gone into decline. In 1962, Burma was the richest country in Asia. They threw out all the foreigners, and within 50 years, Myanmar was the poorest country in Asia. I can give you many other examples where countries have closed off, thrown out the foreigners, and gone into serious decline.
What are derivatives, and how big is the derivative bubble?
Well, derivatives are a way to invest or to take a position in an asset but you don't have to really put up too much money. It's based on the future. You're hoping the future will go your way. In a very simple definition of derivatives, they are staggering. The derivatives market now is bigger than the world economy. And I explained to you before, you should be very worried because we're going to have huge economic and financial problems worse than in your lifetime. That's one of the reasons, because they're going to start exploding, and there's no backdrop, there's no guarantee for any of us. At least your bank account is theoretically guaranteed by your government in many countries. There's nobody guaranteed that derivatives are staggering in size and complexity. Most people, even the management of the banks, have no idea what their real position is in derivatives.
Of course, a lot of the banking problems caused in the past were blamed on derivatives. If people don't really understand it, can you really regulate the banks?
Well, as has always happened throughout history, markets develop faster than bureaucrats. People go into controlling positions in bureaucracies. That's the reason they're there, is because they can't get a real job. So they go to work for the government, and they never know as much about what's going on in the markets as the smart guys who are down there doing it. That's why they work for the government. But the smart guys always get out of control. They always make mistakes. They always get full of themselves. Some of them are dishonest, which makes it even worse. And then when the bubble explodes, the bureaucrats are the last to know what happened.
How big is the derivative bubble?
Oh, well, I've never sat down to measure it, but the numbers I have read from people who purport to know what they're talking about, as I said, it's bigger than the world economy by a multiple. I mean, it's not just bigger than the Canadian economy. It's bigger than the entire world economy.
What happens when that starts to wobble?
I want to repeat, Jim, you should be very worried. It's going to be the worst financial and economic turmoil of your lifetime and mine.
Are hedge funds in trouble?
Well, some are. Just because, Jim, we can't have 30,000 smart 29-year-olds. The world just doesn't work that way. And then everybody jumped into the market in the past few years because it was a glamorous and fast way to get rich. Well, it was great. When I was in that market, there were, 5 or 6 hedge funds in the whole world. Now, as I said, there are over 30,000. You just cannot have that many smart guys, especially when they're all chasing the same economic situations, and the economy worldwide is not as good as it was before.
Is that why hedge funds could be in trouble?
Well, it's not just hedge funds. It's insurance companies, pension plans, certainly hedge funds. Hedge funds use a lot more leverage than most pension plans, for instance. So sure, you're going to see a lot of bankruptcies in the hedge fund business, but not just there. That's where the hot money is and the leverage money is. So you're going to see a lot of serious problems there. But I want to repeat, Jim, it's not going to be just hedge funds. Everybody you know is going to have problems, including you and me, and some of them will survive. Most won't.
Is a way to protect yourself if they're going to dip into bank funds to protect banks in trouble is spread your accounts across several banks?
That's certainly one way in several countries as well, but also to have different kinds of assets. On government bonds, it's unlikely they're going to take your government bonds. It's more likely they will force you to buy government bonds. They're going to take your pension plans. In the 30s, they took gold because that's where the money was, and that was part of the financial system and the monetary system. This time, the money is in for the pension plans. So they're going to take your pension plan. What they'll do is they'll say, listen, Jim, you're having trouble getting a high return on your pension plan. What we're going to do is we're going to give you government bonds, and you don't have to worry about the future. Your pension plan will be safe. You will have a guaranteed return, and you'll be better off. And in the meantime, we're going to take your money for you and give you government bonds in exchange.
Should people be piling up their own gold and silver?
Well, I told you I own it. I'm not buying it at the moment. But certainly everybody should have some gold insurance and silver as an insurance policy, if nothing else. I mean, you have fire insurance, you hope you never use it. Likewise with gold and silver, you should have it as an insurance policy, if nothing else. But also you can have it to make money. If you know what you're doing, you can make a lot of money in gold and silver. But if nothing else, everybody should have at least a little as an insurance policy.
We've seen some horribly big banking scandals. Wells Fargo fined $185 million for creating accounts for people that they didn't know about. Then they churned the accounts, charged people large fees for non-sufficient funds. Are the people who run the banks above the law? Because nobody ever goes to jail for these things.
Well, you're right. Nobody, not many. In fact, I can only think of maybe one or two people, if that, have gone to jail in the last 10 years in the financial community, even though there were staggering bad things done. I'll just say bad things. I won't say dishonest things. And nobody's gone to jail, which is ludicrous, of course. Even in the 30s. In the 30s, the president of the New York Stock Exchange went to jail. His name was Whitney. You didn't have a finer name than that in New York in those days, and yet he went to jail. But these days, nobody seems to go to jail. I mean, if you rob a liquor store, they put you in jail. But if you take billions, nothing really happens to you. In fact, you still are an honorable person in most of the world. Well,
the Wells Fargo fine, for example, amounted to 3 days' profit. So where's the disincentive from creating, false accounts or falsifying other financial information?
And they don't let you go bankrupt, Jim. I mean, only Lehman Brothers went bankrupt. Nobody else went bankrupt in the past 10 years. So even if you make massive amounts of mistakes, you don't go bankrupt. They bail you out, and nobody goes to jail. I listen, as I say, you should go into the finance. Don't become a drug dealer or a robber, a burglar. You go to jail. Go down to Wall Street.
Do you think people are losing faith in governments because they can't control the central banks that don't seem to understand what's going on with the economy?
Well, there's no question that people are losing confidence in governments around the world. Look at the United States election right now. I mean, there were three people who seem to be in the press, Trump, Clinton, and Bernie Sanders. That's not confidence in government. You have the two people left are despised by 70% of the population, and yet they're there. I mean, somebody knows something is very seriously wrong, and it's getting worse and worse and worse, which is another reason you should eventually own gold and silver, because when people lose confidence in government and paper money, very frequently they have turned to gold and silver, and it's getting worse.
Will it make any difference to the markets who's elected in November?
No, if Mr. Trump does what he says, and again, to use his words, it will lead to bankruptcy and war. But Mrs. Clinton, the same thing. It will be bankruptcy and war with her, too. It just takes longer. She's not as smart.
Why do you think politicians put so much faith in the central bankers? Is it because they don't really understand economics, so they hope the other people will?
It's absolutely because they don't understand what central banks are and what they do. They don't understand finance or the money system. But, Jim, I hasten to tell you, it's only been in the last 20 years or so that anybody could even name a central banker, even 40 or 50 years ago. Nobody knew there were central banks. For the most of the past few hundred years, nobody had known about central banks or what they are or that they exist. It's only recently that these guys have gotten some kind of cult status and people have confidence in them. Alan Greenspan became the head of the central bank. I mean, he was a guy who failed when he couldn't make it on Wall Street. So he kept trying to get government jobs. And then as soon as he became the head of the central bank, he suddenly became this genius, this revered guy who could do no wrong. But we found out he could do lots wrong. And it's remarkable that you look at the ones now, Bernanke, Yellen, these are people who had no clue. They're just academics. They don't have a clue. And yet suddenly they become revered by the press and everybody knows their name. But if this were the 1960s and I said to you, what's the name of the central bank, head of the central bank, you would say, what's the central bank? But now everybody knows, many people know about central banks and think they must be smart or they wouldn't be there. I tell you, they're not smart, and the reason they're there is because they're not smart.
Would the world be better off if central banks were abolished and governments went back to just having ordinary treasury boards to look after their individual finances?
Well, America's had 3 central banks. The first 2 disappeared. This one's going to disappear too because it keeps making so many mistakes. A world without central banks has problems, but the world with these central banks will have worse problems. So yes, we're better off abolishing these central banks and starting over and letting the market decide.
Jim, thank you so much for speaking with us on This Week in Money.
It's been my pleasure, Jim. Let's do it again sometime.
My guest has been Jim Rogers. Check out his brand new book, Street Smarts, Adventures on the Road and in the Markets. Coming up, Payton Nyquvest next on This Week in Money.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
We're chatting with Payton Nyquvest. He's a Vancouver investment advisor at MackeyResearch.com. Welcome back to This Week in Money, Payton.
Thanks for having me.
Payton, how did the junior markets do in Canada this week?
The TSX had a high of 1483, low was around 14475, so closing around 14697, so up about 142 points for the week. The venture had a high of 804, low was 799, closing at 810, so up about 6 points for the week. And the CSE, Canadian Stock Exchange, had a high of 730, low was 688, closing at 714, down about 16 points for the week.
What were the highlights?
Sounding like a bit of a broken record, but it continues to primarily be led by a lot of the gold stocks, Colorado Resources, K2 Mining, Rocks Gold, First Mining Finance Corp, a lot of those leading the charge still.
And once you get out of the junior gold miners, are people looking at anything else like lithium?
Yeah, the whole resource space, I would say, lithium's still continuing to be quite active. Companies like ML, there's been quite a few high flyers in the last little bit.
Is there a lot of action in companies that are finding new ways to recover lithium, say, from old oil wells?
Yeah, that's kind of been the new focus here, is not so much going out and finding lithium, but more so finding an economic way to process it. Has proven to kind of be where a lot of these lithium companies have started to shift their focus. So,
Canada has a lot of areas that are rich in uranium, but uranium prices have been depressed, I would say, over the last 5 or 6 years. Any hope that action's going to improve?
Yeah, you're seeing, there's been a lot of news out of Japan and China about nuclear reactors getting turned back on. There's an expectation to see a bit of that this fall. But you're seeing companies, NextGen, Sky Harbor, a few different uranium companies that are operating up in that Athabasca Basin, continuing to have some success. So I think going forward there'll be quite a lot of attention there.
How are diamonds doing?
Well, diamonds, especially in Canada, are continuing to be very interesting. Storing Away just hit a new high the other day. They're expected to start production very shortly. Mountain Province, same thing, hit a new high of over $7. They actually had their official mine opening on Tuesday of this week, and there's been a lot of action over there with the anticipation of that mine being open. Mountain Province is a JV deal with De Beers, and has been something to look forward to in the diamond space for quite a long time. So you're now starting to see some residual effects of that. There's a lot of little diamond explorers, including Margaret Lake Diamonds, who is up exploring for new kimberlites up and around that Mountain Province, Kennedy Diamonds area in the Northwest Territories.
Is there any concern that we're going to run out of young geologists to go looking for these new finds because the junior mining industry was in such a slump for such a long time?
Well, it's obviously had a pullback, and there's it's actually a bit of a rare commodity to be a young guy in the junior mining business, but you're starting to see, I think, attention starting to get paid, and it'll flow, where the money's going. So I don't think that'll be too much of an issue.
Payton, thanks a lot for chatting with us.
My pleasure. Thanks for having me.
My guest has been Payton Nyquvest, Vancouver Investment Advisor at MackeyResearch.com. That wraps up our show. We'd like to thank our guests, Ross Clark, Jim Rogers, and Payton Nyquvest. And thank you for listening. Coming up right after the end of this show, we'll have Company Showcase featuring CEO and President of American Manganese, Larry Reaugh. I'm Jim Goddard. We're back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
We're speaking with American Manganese CEO and President Larry Reaugh on September 13th, 2016. Larry, what can you tell us about your company?
Well, I can tell you our company is now focused on quite a different set of parameters than we were here a year ago. And those parameters are on the recycling of lithium-ion batteries. And Jim, I have to say that we were fortunate that the company was able to look within itself for organic growth. And what we found, or what Chemetco found for us, was that our process that we developed to liberate manganese from low-grade ore deposits in the United States was suitable. And this is a patented process, by the way, was suitable for recycling and upcycling of lithium-ion batteries. And the more we studied it, Chemetco was very convinced that we should be able to successfully do this. So we said, okay, what do we need next? And we needed a proof of concept. So we started that a few months ago. And Chemetco came out with the first phase of the process, which was to leach the cathode material, which happened to be lithium and cobalt, and they extracted 100% of that material. Now, it was in solution, so our next phase was to precipitate it. And we just announced today that was a successful effort. We got out of the first cycle, we got out 60% of the lithium and 91% of the cobalt. And I'd like to just kind of interrupt the flow here by saying that when you're looking at the economics of a recycling program, you wonder where the money is. Certainly the money's in the lithium cobalt, but it leans more heavily to cobalt because a lithium-ion battery contains 60% cobalt and 4% lithium. And so you can see where I'm going with that. The battery has much more cobalt in it, which trades at about $12 a pound, and currently lithium's trading at $8 a pound. So that's looking at the economics of the situation. But we don't want to take our focus strictly on economics. We also want to have this as an environmentally friendly process. We want it to have as a circular economy where you wouldn't have to open new mines in the years to come to supply cobalt and lithium to the battery industry. And it has no waste products, so the recycling plant could be set up in for example, an industrial park in the Lower Mainland here, or in Los Angeles, New York, or wherever or Shanghai, wherever you had a inflow of lithium-ion batteries there. The batteries are starting to reach the end of life. There was 282,000 batteries that reached their end of life last year. That number will grow to over 500,000 by 2020. And then I don't know what the numbers will be after that, but it'll eventually be in the millions of batteries a year. And so you want to have a efficient and a environmentally friendly green process in order to recycle those items. So we think that we're on the right track. And to give you an example, the press release that we put out on August the 4th got the market excited about what we were doing, and we traded up until yesterday around 110 million shares in just over a month, and then today we traded about 10 million shares. Unfortunately, we still have that problem of shorting going on, and it was pretty obvious to anybody watching the market that we were getting heavily shorted. And that's a combination of, well, actually not just a combination, it's the fact that the market's dipped quite dramatically today, and they took down a lot of stocks, and this is when the short players, the predators, come out and they pounce on a stock, and they can take good news and turn it into bad news in a heck of a hurry. And that's probably what happened today, and that's strictly speculation on my part. I've been studying this issue for a long time, and I've seen it repeat itself over and over and over again, not necessarily in Amy, but on a lot of other stocks that I follow out there. So that's one of the things that we're up against, but we think that we have a product that will overcome. And that product is, what we're working on at this current time. Now, Jim, I was back, I broke this conversation off at where we announced the precipitation tests today. And I'd like to point out that that was a first-pass precipitation test, so we got 60% of the lithium, 91% of the cobalt. But if we lock cycle it, which means we cycle it a few more times, we can get much, 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 much higher recoveries, and that'll be work that's going to be ongoing. And so we'll have an update to this at some time in the future. I can't exactly guess because there's a lot of assay and outside work that has to be done by the research lab in order to get those results. But I'd hope in a few weeks that we could update everybody on the precipitation tests, and then we're definitely going to move ahead on our. We've got enough powder to to start our testing for rechargeable lithium-ion batteries, and we should be able to start working on that in the next few days, and hopefully we'll have some news in a few weeks coming on that. So the company is, it's progressing, and we are happy to say that we haven't hit anything that's a major roadblock, and that we're striding ahead. We don't know of anybody else that's doing this because it is not a transparent business. So, the company is trying with all due diligence to get this out as quickly as possible so we can move on to the next stage. And that next stage, of course, would be looking at at pilot plant testing and commercializing the process. And by commercializing, I mean we'd have a much larger pilot plant test than we did with our initial manganese testing back in 2010 and 2011. And that would entail a larger plant because we want to produce a ton or two of material in order to basically to make the powder available to battery manufacturers. And so that is going to be another step, and that'll probably start sometime early next year. Now, lithium-ion batteries are in the news. Lithium's in the news. Cobalt is starting to be in the news. We know there's shortages coming in both of those products, and we hope to be able to supply some of the answers for those shortages. And this doesn't just stop at lithium cobalt. We'll also be, sometime in the near future, we'll be looking at other combinations like nickel, manganese, cobalt, lithium, nickel, manganese, cobalt batteries, and we'll be looking at separating those cathode materials out and producing a powder that could be used back in that type of a chemistry. So we really have a tiger by the tail here, and just to keep up with everything is, it's a fun project. Now, I know I've been kind of on a ramble here, but I'm trying to fill in the gaps as much as I can, and let you know that management and Chemetco Research are pushing ahead diligently to make all this happen. We're starting to get some outside interest. We probably will be looking at some government grants that could be significant in the pilot plant stage. And we actually believe that we will be funded partially through grants and partially through equity or partnerships or something like that, because it really opens up the door. And that door is, what do you do going forward? I think at a certain point, after all of the proof of concepts completed, that we will have end up with a partner. That's speculation at this point, but being in the business for a long time, if you've got something that everybody likes, and it generally results in having a partnership somewhere along the line, or licensing agreements, or sales of royalties, or anything like that that will help fund the company besides equity. But equity is always one way to go, especially if you got grants to supplement that. And so we're encouraged that everything's falling into place the way we envisioned it, and we would hope that at the end of the day that we're successful. Now, another aspect to look at is, cobalt is in danger of being in demand with little supply, and that could happen as early as the end of this year, according to all the other pundits out there. But, I can't see any argument against that. And in reality, the cobalt market could explode. And, rising prices don't mean rising supply. Not immediately. That could take years. And it's certainly not going to come from a byproduct producer who and byproducts, by the way, produce about 96% of all the cobalt. Primary is only about 4 or 5%. I think those numbers are correct, but I'm probably within a few points. And so it's got to come from somewhere. So, I could envision the company being a primary cobalt producer somewhere down the road. This might be a few years from now, but certainly would be somewhere down the road. And I think that we've got everything that we need to move this ahead. So we're looking at being a primary producer of cobalt, being definitely one of the producers of lithium, and perhaps in a smaller way nickel and manganese, And, the vista's wide open. We could be testing for aluminum, vanadium, depending on the chemistries. And, but we're not, we don't have any intelligence on that, so that's just a speculative glance into the future. So when you look at it, you say, okay, here's a company that's a mining company, and right now they've got a product that the commodity price is way down on. I think the last time I looked at the price, it was around 80 cents a pound for EMM, maybe similar prices for EMD, and that's not conducive to ever go into production with our low-grade deposits in Arizona. We need better prices, and we need better times for that. So the company is, reached into its arsenal, and we're very fortunate in Cametco recognizing the other application here, which is the upcycling and recycling of batteries. So we're not getting out of the mining business. We're just saying, okay, there's no money for it. Nobody wants to put money into it, so we'll hold on to some of the resources that we have in Arizona. We've dropped most of those, but nobody really can treat the low-grade ores unless they have our process. And so we got enough down there that would, be enough to start an operation, but which is reasonable to handle the costs of maintaining every year. And so we'll hang on to the manganese, and we'll also hang on to our higher grade gold and copper and silver project up in the Rocheux-de-Bois area out of New Hazelton. So we're hanging on to our mining assets. That does bring up the question of, well, maybe we should separate the two, and that's something that we're looking at. And but we have to, before we make the separation, let's be totally 100% sure on our recycling, upcycling, and then we can look at what we're going to do to spin out maybe two companies out of this. And but other than today, which was a bad day in the market for everybody, I think the way to look at this project is that it does have legs, and we will advance in the future. But I'm confident that we're doing the right thing, and I think the shareholders like it.
Larry, is there a website people can go to get more information?
Yes, our website is AmericanManganeseInc.com, and I can be reached at 778-574-4444, and my email address is lreaugh, R-E-A-U-G-H, @AMY, mothernorman.com. And you can always get a hold of me in those areas.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. This has been a HowStreet.com Radio Company Showcase. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.